Hello investors and traders, today I'll speak about the stock market, equities and US stocks. And let's start with the S&P 500 index. We can see that current level is more than 4,000 and we have as resistant level at 4,020. If we will break it resistance level, of course we can see the S&P 500 much higher this year. S&P 500 is now down more than 20% since the beginning of the year. And also, if we will check the waves, let's check something. I would like, in my mind, we had here the first wave, then the correction second, then the longest wave in our impulse is the third one, then ABC move. It's classic correction, the fourth wave, and now in my mind I think we can see the fifth wave. Fifth wave, it's the last wave in our impulse. So of course, if here it's the fifth wave, we can see levels much higher than this one, than 5,000. So I think that there is a nice potential for performance of this index. And let's use the Fibonacci waves. We can see that if it was here, our correction is finished, so then there is a nice Fibonacci level at 6,020. So in my mind, of course, using the Fibonacci, there is a potential. I'm not sure that it will be this year, but maybe next year, in 2 years, we can see nice levels of 6,000 at S&P 500. And let's check the Nasdaq. It's the IT index. So here we also can see a nice bounce after the correction is finished. Now in August, in July, the last weeks, we can see that the Nasdaq also showing a bounce. Also, let's see the RSI, the momentum indicator. Here it was a nice signal for buying. Last time we can found it was only in the COVID crisis. It was at March 20. So here I think nice points, nice levels to buy. Of course, we had here a support level, so it was 10,000. So here all the IT companies, the Fangman, Netflix, Google, Apple, of course, they have a very huge potential till the end of this year. The next one is Russell 2000. Also, it's the small cap companies. Here we, of course, it's from the technical standpoint of view. Of course, it was a support level here at 170. We didn't broke this level, so from here I see that still we have a very huge potential to grow till the end of this year. Performance of this index is year to date is more than 40%, and of course last 6 months is also down 3%. So in my mind, we can see in the near future such nice levels of 200s very easily. And let's move to the oil price. We can see that now we have a nice correction at oil price. It's a weekly chart, so I guess that if we will see oil, the price of oil in the levels on 20, 60, 70, of course it will be very good sign for the inflation. And of course now in the US there is a inflation spike, and the portion of the oil price, the fuel price in the inflation is very significant. So if the correction in this commodity will continue, of course, I think that the inflation also will show a few signs of relief. If we will check the euro-dollar pair, that also here we have a parity. We broke the support level here. So also we have a declining channel here. So I guess in the future weeks, the future months, my current target is 0.80, 0.19. I think that this pair is might be at this level. So my target is here at this lower border of this declining channel. And the DXY, the US dollar index, also it showed us, let me check, a few weeks ago it showed us the highest level. Now we see a correction, but still the inflation in the world, on the conflicts, the wars, so very issues in this year. So I'm not sure that in the near future we can see very strong correction in this in the US dollar. In my mind now the dollar is the strongest currency in the world. So if you would like to invest or to buy some assets, maybe the dollar is the most attractive one. And let's check the US Treasury yield. Now the yield of this bond is 3.3 for the 2-year, and for the 10-year is less than 3%. So here we can see that it's inverted yield curve. It's a very bad sign that in the nearest future the players see more risk than in the long run. So it's not a good sign. That's why I think that maybe in August and September maybe we can see another correction in the stock market, because the bond market is the smarter and is the bigger. I mean the market cap and the volumes in the bond market is much higher than the stock market. So of course the inverted yield curve is very confusing me. That's why I'm not heavily buying stocks right now, because when I see such signal, such signs, yeah, when the 2-year is higher than the 10-year, don't forget that it's not a good sign at all. And let's check a few stocks that I'm continue buying right now. The first one is Shopify, it's Canadian stock. We can see that now it's very tough correction. Its performance year to date is more than 70%. That's why it's very cheap now. Here we can see that we had a support level. It was about $30. Now we bounced a little from this level, but still there is a huge potential for bounce. And the RSI, the momentum indicator, is also in the weekly chart is 40, and the weekly also very low. It's 35. So from the RSI standpoint of view, it's a nice sign to buy this stock. And the next one is PayPal. Let's check its chart. We can see that very tough correction in this stock. Its performance year to date is more than 50%. So very nice price now. Also we had last week quarter report. The earnings showed us a nice surprise. Also the revenue also is surpassed the analyst estimates. The report itself was very nice. Also the PayPal say that they are planning to perform buyback. The amount of buyback will be about 15 billions of dollar. So if the market cap, let's check the market cap, current market cap, we can see that it's about 100, so 15% of the current market value. It's nice. So of course the buyback can support its stock price. And let's have a look on its fundamental figures of PayPal. We can see that financial strength is okay. The ratio of debt to EBITDA is less than 3, interest coverage 15. It's very nice. So any problems with debt at this company the gross margin is above 50, and the net margin is 7. So it's okay. It's not, of course, it's not Google, not Apple, but for this current market conditions, from the economic situation, I think it's okay. Also, we can see that 3-year revenue growth rate was 18, and the EBITDA growth was above 20, and the future forecast of analysts for the future 3 years, the EPS will grow more than 18%, and the revenue growth will be about 15%. So it's very nice figures in my mind. Also, the PE ratio now is becoming more attractive. Now we'll check at the chart, but now PE ratio is 30, PS ratio, price per share, is only 4. So now it's okay. It's not so expensive as it was 2 years ago, 3 years ago. So let's check here the PS ratio. We can see that now it's about 4. So we can see from here, this chart is telling us everything. Here, the pandemic crisis, it was 14, it was about 10. We saw such levels like 6, 7, but now it's only 4. So for revenue, for the price, it's okay. So this stock I can continue to buy at the current levels. Also, I like the quarter report, the buyback. The price is not so high. It's not 300. It's not 200. So also, if I'm not mistaken, there were a few gaps here. We have one gap here. Let's check it. Yeah, the first one is here, and the second one, the gap here. So most probably we are going to close these gaps, and from these levels there is a nice potential of 60%. Of course, it won't be the next week, the next months, but anyway, in my analysis, PayPal, it's very, very strong and a very nice stock to buy right now. So if you like this video, press the like button, subscribe onto my channel, and see you in the next time. Bye.